Hello, it's Thursday the 20th. I'm FxPlew and this is the market brief. So inflation data fell to 7.9% in June. This is the lowest we've had in more than a year, and the market reaction was to bin long sterling positions. Where there's news, where there's reaction, there's usually a trade. The logic for that one would have been that the Bank of England may be less likely to deliver a 50 basis point rate hike where inflation dropped more than expected. Indeed, cable dropped from about 130.25 to about 129.50 immediately on the data, so there was indeed a trade to be had. However, 7.9% is still a long way from the 2% inflation target, and many MPC members think the economy can still handle more aggressive rate action. So there is also the view that they will still vote for another 50 basis point rate hike, motivated by the positive reaction so far. But this has seen interest rate forecasts trimmed a bit. Where we did have a 6% peak, they're now calling the top at 5.75%. But that might be a little premature. Don't forget, inflation went up last month. Watch this space then. Many of those long positions may well come back on the table before too long and before the MPC meeting. Over in the US, Biden is viewed by many as a pretty steady hand on the tiller. He doesn't court or indeed receive much credit for the economic performance over the last 2.5 years, and that's perhaps because it's more due to the strong cabinet that he has around him. Treasury Secretary Janet Yellen was the last Fed chairman nominated by a Democrat president, and Fed Chairman Jerome Powell was a lawyer appointed to the position by Trump. They've proved a pretty good winning combination, and it was brave of Biden to retain Powell when Congress saw him as a Wall Street-controlled Republican, and many of them wanted him removed. Of course, there's still plenty left to be done to ensure that inflation is indeed defeated and the economy avoids a recession, but many feel the US could do worse than 4 more years of Biden stability. For now though, the main focus is very much on the Fed. Will they hike again at their next meeting on July 26th, or will they extend the pause for another month? Bear in mind, they have August off. Yes, even the Fed members deserve a little hollybobs over the summer, but that would mean that a vote to pause would actually extend the pause until the next meeting, which is on September the 20th, and that may be seen as too long for many. In the market, sterling sold off on the inflation data from the UK, where we actually dropped down to about 128.70 at the low point against the dollar yesterday, and that helped the dollar index to continue to recover. That rose to about 100.50 on the day. We opened this morning around 129.20 against the dollar, about 115.30 against the euro, and euro dollar is around 112.10 this morning. That's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.